Hey everybody, happy April to everybody. We are going to be talking about some retail stocks today. Now, I am aware that retail kind of scares a lot of investors, especially in this age of e-commerce, but hear us out here. We have two brick and mortar retail players that we think are worth a closer look right now. Before we dive in, please take a minute, click subscribe to my channel, and check out the link you see on your screen, fool.com/Frankel, for a message from our sponsor, The Motley Fool. It's the best way to support this work we're doing. You can get the top 10 stocks to buy right now. Again, that is fool.com/Frankel. So Tyler is joining me today, and Tyler and I don't often agree on the same stocks. So when we do, it's worth taking notice. There's something to them when we both like them. Um, so we're going to talk about two retail stocks. It shouldn't surprise you if you follow my channel. These are real estate investment trusts that focus on retail, and in a way, they're kind of competitors with each other. So, Tyler, which one are you looking at right now?
So I am looking at Tanger. I think it used to be Tanger Factory Outlets, but it's just changed its name to Tanger Inc. And I found it very appropriate that you started this out by saying "hear us out" because I feel like that's the theme of whenever I pitch stocks to you on these videos. It's just hear me out. Come on, let's be patient here. So the thing is with Tanger, I could go through a lot of the operational stuff, right? 91, 92% occupancy. I think recently net operating income has been increasing. And all in all, it's just been one of those businesses that has been relatively well run. But you could say this for a lot of different companies, especially in the retail space. Like that exact explanation could explain, Matt's Simon Property Group or Kimco Realty, or I can name like a whole bunch of other retail related REITs that more or less just is what I described. The thing that really sets out to me for Tanger, at least as a long term investment in the business, is the way that management is compensated. Now, I understand that that seems like a wonky way to determine which one to buy, but it is something to me that I think is an important component that a lot of people don't pay attention to. So I'm going to bring something up on the screen so we can share a little bit and show you what I'm talking about. So this right here is basically how Tanger is compensated, or its management team is compensated to do their jobs in terms of annual cash bonuses. Now, when you're looking at how to assess how a management is compensated, you want to look for alignment to your interests. And that doesn't necessarily mean growing operating income or growing revenue, because I can do those things without actually generating any value for a shareholder. I can issue a bunch of stock or take on a bunch of debt to do those things, and maybe that doesn't translate to bottom line returns. And this is where Tanger really stands out. So the very first thing, core funds from operations per share. This means that 25% of his compensation is literally growing the amount per share that you receive as an investor. That per share element is incredibly important because, if I just grow FFO and dilute shareholders into oblivion, it doesn't really matter. So that's an important part. Then we have, growing net operating income. So we have a component of growth, we have a component of per share value, and then we have operating margins, which is kind of like a focus on costs, efficiency, trying to get the most out of their properties. So with a incentive compensation package like that, I know this sounds super wonky and like, oh, who cares? Like, I'm buying businesses. The way that management is compensated is basically what they're going to do. That most management teams aren't as altruistic as we think, and they just wake up and say, "How can I create shareholder value?" Most of them wake up and say, "How can I get my bonus this year?" And if that bonus structure is done in a way that aligns with your interests as a shareholder the best possible, you're probably going to get good outcomes. Now, as far as the stock itself, I'm not like super jazzed about Tanger's valuation right now. I think it has a dividend yield of about 3.7%, which is good, not great. But in terms of something, if I wanted to actually hold retail for a long time, It's things like its compensation structure is going to be a big differentiating factor and why I want to continue to own this, even at what I would call a meh valuation right now. That's why I own it today.
Yeah, so I'm a big Tanger Outlets fan. There are several Tanger properties in my state, South Carolina. They generally are in coastal areas, especially where there's a lot of tourism, like Myrtle Beach is in South Carolina. There's a big Tanger property there. Before we jump into mine, Tyler, I love that you looked at the compensation structure because it's rare to find one that's that aligned with investors. But for people who might not know, can you give us maybe an example of like a bad compensation structure, just so what other companies are doing? Because I know you've mentioned a few before.
Sure. So one of the things that I very much get shy away from, especially is when I see things like operating income growth or in REITs, just basically funds from operations with no per share restriction on it. Because if I'm a manager and I just want to grow, I'm going to take on a lot of debt. I'm going to issue a lot of shares, and my cost of capital is kind of meaningless because all that matters is number go up. And for a lot of shareholders, that can destroy value because every dollar that you take in to make a purchase, whether it be debt, whether it be equity, there is a cost to that. Whether it can be interest expenses, it can be your dividend, it can be the kind of the investor expectation of what your stock can do. And if you're not cognizant of those costs when you're trying to grow your business, you can destroy value. And so one of the things that scares me more than anything else is when a management team is just compensated to grow with no restrictions whatsoever on returns or per share value.
Yeah, I think it was what was it, Stag Industrial that was a specific example you pointed out that they grow a lot by I don't want to say grow by dilution, but by issuing new shares, by taking on debt, not necessarily by growing FFO per share as much as peers. So that's really good to look out for. So Simon is my pick, as Tyler kind of mentioned earlier. Simon Property Group (SPG). Tanger symbol is SKT, by the way. Um, and I say they're kind of competitors because a lot of people, especially even if you know Simon Properties, a lot of people know Simon for their big kind of high end malls that are in big population centers all over the world. The Mills is one of its big brand names. It owns some of the most valuable malls in Las Vegas. The Forum Shops next to Caesars is probably its most valuable property. Um, and I believe there's actually a Simon Mall near Tyler, even though he's nowhere near the rest of us.
5 blocks from my house in Tbilisi, Georgia, Simon Property
There you
Groups.
go. But a lot of people don't realize that Simon's biggest property type is outlets. They are the company behind Premium Outlets. If you ever see a Premium Outlets property, that is a Simon property. They are actually the number one outlet company. Tanger is the pure play on the public markets by far. Um, but Simon controls about 2/3 of the outlet industry through its premium outlet brand. Uh, Simon's properties have been doing very, very well lately, especially considering the current environment and uncertainty and interest rate environment, things like that. Its net operating income grew by more than 7% last year. Occupancy grew by 90 basis points, even though there's a lot of economic fears going on right now. And just to kind of give an idea of how good Simon's properties are, just quality wise, the average Simon mall is in the top 25% of malls in America by sales by square footage. The average. So Simon has big advantages over peers in a lot of ways, in especially when it comes to financial strength. They have over $10.9 billion of liquidity, including $2.8 billion of cash, which, if I'm not wrong, is bigger than Tanger's entire market cap. Um, I'm not saying that I own Tanger, so but they have a good buyback program. They have a good dividend yield. Simon is a 5.2% dividend yield at the current share price. And that financial flexibility lets them invest in redevelopment and kind of keep all of their mall properties more relevant. Every town in America has a mall that people used to go to and don't go to anymore. My town just demolished that mall. It has been essentially vacant for years and years. I used to work in that mall in college. I used to work at the TGI Fridays in the mall that eventually died. And there are so many stories like that in the mall industry, and that doesn't happen with Simon's malls very often. A kind of fun fact: Simon owns the oldest mall in America. It's called the Southdale Center in Minnesota, which opened in 1956, the first indoor shopping mall, and it is still thriving today because Simon is continually reinvesting in the property. It now has a apartment building attached to it. It has a hotel attached to it. It is a premium fitness center that keeps a natural source of foot traffic for its retail clients. So that's really a big competitive advantage to be able to do that and to be able to do it relatively cheaply. Um, Simon, even in this current environment, borrows money for about 5%, 5% interest in this environment. Now, refinancing is going to kind of cut into their profits a little bit. They have $2.5 billion of debt maturing this year. That debt has an average interest rate of 2.9%. They're not going to refinance it with that. But they can refinance and borrow money cheaper than most peers can. I mentioned they have $2.8 billion of cash. So if they don't like the refinancing environment, they can pay a lot of it off just with its cash. So it has that flexibility. But if I had to pick a winner between the two, I really don't know. I own both of them, and my position sizes are pretty equal. I think both will win. I love the outlet industry in the United States. I think it has a lot of room to grow. It's a relatively cheap form of retail to run for retailers. And I don't know, Tyler, I think I know what your winner is, but maybe you'll surprise me.
To be honest, I haven't looked enough at Simon recently to make a really like a snap judgment. So I'm gonna plead the fifth on this one.
Just another fun fact: Tanger's CEO Stephen Yalof was kind of stolen away from Simon. He was the former head of Premium Outlets, so Tanger couldn't have made a better hire to replace the co-founder who the company is named for. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.